within the registration threshold, there is no idea how long it can take. One, customer short-handed with the implementation. Two, because this is voluntary registration, is on a case-by-case basis, which they have to look at it manually. And if they have to look at it, they will look at it when they're free. So I don't know when they're going to be free. And many businesses actually face that issue now. They want to register because they want to be able to face their customers and tell them, I have registered. And yet, customs does not get back to them. And if customs does not get back to them, they might lose business. So these are very real practical issues being faced by businesses today. Now, I was talking about implementation of GST. Let me say this. For today's presentation, I only prepared one slide, and this is it. There's additional slides behind that, but that is basically from the textbook, which I will run through. But for my topic here today, this is the most important thing. Implementation process. This is actually project management. So how do you implement GST? First, you have to assess your position. Where are you now? What is GST to you? Do you need to register? Can you register? What type of supply do you do? Once you assess that, if you are required to register, if you want to register, then only you move on to the next step, which is to register. Registration, quite straightforward. Just need to log in and go online. In terms of the nuances of it, is to think about whether you want to go for group registration or registration of branches individually, etc., or whatever. But these would be on a case-to-case basis, depending on your individual requirements. In general, most basic companies would just do a simple registration. Having had the simplest and easiest step out of the way, the next step would be actually the gap analysis. Where are you now in terms of readiness for GST? And to know where are you now and where you need to be, first you have to identify what is it that you need to do under GST. Under GST, your obligations are things like the tax invoice, the GST return that I showed you previously. And so are you in a position to do that? If you're not, what do you need to do? So then that will fall back to, do you know what needs to be in each of these aspects? So all of this I will cover in more detail in the textbook slides. But basically, your organization, we need to issue tax invoices. And tax invoices under the Act has defined certain characteristics. And those characteristics needs to be there for it to be called a tax invoice. The details I will run through in a later slide. Accounting systems. Today somebody asked me, is it possible to do GST manually? Yes, in theory it is. However, practically, if you meet the registration threshold of 500,000, you would have quite a number of transactions. And you need to remember that for every transaction, you need to keep track of the input tax and output tax. So, from a practical aspects, I would say in general, it is quite difficult to do it without software. So, you need to identify a software to help you do this. And what is the best software? That is the question where a lot of people want to answer for you, because then they want to sell you software and make money. But actually, to me, the best software would be existing software that you're using now. Just get a vendor to upgrade it to be GST compliant. That is a much simpler learning curve. Next, tax codes. GST has tax codes which needs to be integrated into the system. Most of the time, you can actually work with your software vendor on this. Once you implement the right tax codes into the software, everything is quite automatic, quite simple. But if the business is more complex or more unique, you might need to engage a professional to work with your vendor to implement the proper tax codes. Somebody told me that they are actually focusing on implementation of tax codes. And I asked him why. His answer to me is that because accountants are cheaper than the vendor, so I do it for them. Well, that I hope it's not the type of consultant you look for. Having identified where you need to be and where you are, you need to plan how to bridge that gap. For example, invoices. If you find that your existing invoices does not meet the requirement, what needs to be there? What needs to be added? GST registration number, etc. So these are the plans. Accounting system, if your existing software is not up to date or is the vendor unable to update it to be GST compliant, then you need to source for accounting software. So these are the plans that you need to do. Having had a plan, next would be execution. Preferably try and have everything live by end of the year. So at least you can trial run in January, February and March. Then at least you'll be ready in April. Of course, in any project, implementation management, the most important then after that is the monitoring of it. Having had a plan, having knowing what to do, it's all pointless if you do not know whether you actually did it or not, or how far, or what corrective measures you need to do. So this would be actually the plan that you need to have for your business. So actually, for a company to be able to properly implement GST, the right course that they need to attend is more project management as opposed to GST courses. GST courses can tell them what it is, the logic of it, the theory of it, but at the end of the day, the boss just wants a solution. And if you can't give them a solution, then what's the point? So, having covered the most important part, let me just go through the individual areas. So in terms of the basic GST process, of course you have your input tax and your output tax. So in general, you just look at the net figure. The input tax is what others charge you, and the output tax is what you charge to your customers. So at the end of the day, what you pay to or claim from the government is the net figure. GST is charged on any supply of goods and services if these four conditions are met. 1, made in Malaysia. 2, taxable supply. Now the important thing to remember in terms of taxable supply is that even a zero-rated supply is a taxable supply. So if you make wholly zero-rated supplies, you still need to register. Some people have the thought that because everything I make is 0%, it is up to me whether I want to register or not. Well, actually, the law does not exclude zero-rated supplies. Zero-rated supplies are still included as part of taxable supplies and are used in the computation of the 500,000 threshold. So if you meet the threshold, you still need to register. Of course, sometimes, the impact of that is that if you're zero-rated, wholly zero-rated supplier, you actually get money from the government. So it's to your advantage to register. Of course, some companies might find that cumbersome because of the cost of compliance, to register, etc. In that case, it is actually possible for them to submit a form and request for an exemption from registration. So the last part here is also important. In the course of furtherance of any business, if you're running a business, then you need to charge GST. Now, many people will think, if I just do something casually, do I need to register? The basic general definition is that if you make more than 500,000 turnover a year, how casual can it be? So basically, if you meet the registration threshold, it is most likely, almost definitely, a business. And the next thing to note is that GST is also charged on importation of goods or services into Malaysia. So that is something to bear in mind when you import something into Malaysia. Scope of tax. This is a general flowchart to see whether it is subject or not subject to GST. Basically, I've covered it just now. Okay, what is supply? Supply is basically defined as all forms of supply, including supply of imported services, done for consideration, and anything which is not a supply of goods but is done for consideration is a supply of goods. In general, to cut long story short, it covers almost everything under the sun. Consideration can be money or payment in kind or both. Once again, they try and cover everything. from recipient or third party, again they try and cover everything. So basically, if there's a doubt, if there's any doubt whether it's subject to GST or not, play safe, assume it is. There must be a direct link between the supply made and consideration given. Some people might try and play with this, but basically it is once again quite straightforward in cases where this. So don't try and play with this by saying, oh, I give you something, but I paid your grandmother's uncle, brother, or something like that, and then they assume it doesn't fall within. Deemed supply may apply where no consideration is received for the supply goods, but liable to account for GST. So basically, once again, they use this and catch everything. Goods. Any kind of movable and immovable property excludes money. Supply of goods involve transfer of ownership of goods from one person to another. Services. If you notice the wording here, anything which is not goods is services. So, everything. I think we notice a pattern here. Any person who is registered for GST or liable to be registered for GST is a taxable person. So, if you look at the definition of person, it basically covers everything. So, when it comes down to here, registered for GST or liable to be registered, you're talking about the threshold of 500,000 or anyone who is voluntarily registered. Types of supply, basically 3 types: standard rated 6%, zero rated 0%, and exempt. Now, this is something that you really need to look into. Depending on what your company or business does, what are the types of supply that you do? If it is standard rated, if it is zero rated, then basically you need to register if you hit the registration threshold. If it is exempt and you don't have any other standard rated or zero rated supplies, then you do not need to register. So basically, once again, the general rule, all supplies standard rate unless exempt or zero rate. So they catch everything here. In terms of what is exempt, what is zero rated, there is a exemption order and zero rating order on the customs website, which was issued in, I think, last October, basically during the budget. So if you recall, there was all the debate over whether RON 95 is subject to GST or not subject to GST. So that list was only really determined in October. Before that, there was a lot of pressure, a lot of political talks. And in fact, if you recall, Singapore newspaper actually advertised that petrol in Malaysia will be standard rated before Najib said anything. And so because Singapore newspaper said that, Najib had to come out and say, no, they are wrong. Probably they were right when they printed it. Standard rated supply, this is how it works. If you look at it, multi-stage, so at every stage is paid, claim back, paid, claim back. So at the end of it, it hits the customer with 6%, the end user, and nothing else. Zero rated supply. Zero rated supply means that GST is charged, but charged at 0%. Now a lot of people might look at that and think, huh? What? Then call it exempt. Well, as we have shown previously, there is a difference between zero rated and exempt. Let me tell you, between zero rated and exempt, zero rated is much better because then the government will pay you. Exempt means that what you don't charge GST, but whatever GST you incur, you have to absorb. So that is why when you look at what is exempt, there might be certain impact from that. For example, supply of residential properties is exempt, not zero rated. Because it is exempt, all the GST they incur in the cost of construction will cause the prices to go up. And they cannot claim that back, therefore, they will definitely pass that on to the end user. So, things which are rated exempt will most likely go up after GST is implemented. Whereas for zero rated, the logic is that there should be no price change because any GST claim charge can be claimed back. So examples of zero rated supply: food items, supply water, exported goods, etc. One thing to bear in mind when looking at the zero rated and exempt list, it is actually very, very specific. So some people might say seafood is exempt or vegetables is exempt. But if you look at the list, yes, the general category might be exempt. But the exemption is usually specific to the HS code of that specific item. So not all fruits are exempt. Not all seafoods are exempt. It depends on whether that particular item falls within that HS code or not. Exempt supply, no GST is charged, import tax not claimable, and exemption order is released. Examples: sale, lease of residential property, financial services, private healthcare, etc. Not subject to GST. Examples: non-business supply, supply of goods made out of Malaysia, supply by statutory bodies, supply of goods and services made between designated areas. So this would be out of scope. So GST Act does not apply here. So for this type of supplies, you do not need to worry about input tax or output tax. Deemed supply. Deemed supply is basically something where the government says die must fall under GST. So in general like that. No need to be so specific. Connected persons. Who are connected persons? This is for the purpose of deemed supply. Connected persons are those who are linked to each other. So if they are connected persons, then the criteria under deemed supply here would apply. Free, if you look at the last one, for example, free services to connected persons. So these are connected persons. So if you give free services to other people who are not connected persons, then it would not be subject to GST. Imported services. Imported services is something very complex. I would say not unnecessarily complex. If you import services, it is deemed that it incurs GST. So then you actually need to do a reverse charge mechanism. If I were to go into detail of all of these complex mechanisms, we'll be here until tomorrow. So I shall just skip through this. Place of supply. One of the requirements that we noted must be made in Malaysia. Supplied in Malaysia and therefore within the scope of GST. What examples of it? For goods. Goods which are in Malaysia or removed from a place in Malaysia. For services is supply of the services belongs in Malaysia. For supplies which are not made in Malaysia, it is out of scope of GST. So if you do things like drop shipment, it is not within GST. Designated areas, as previously we have mentioned designated areas, there are three. Langkawi, Labuan, Tioman. Supplies within or supplies between designated areas is not subject to GST, except for transportation between designated areas. Time of supply. Time of supply is one of the more crucial elements of GST because the law is that in the invoice must be issued within 21 days from the time of supply. So how do you determine time of supply? That is the basic tax point. So if the invoice is issued within 21 days from the basic tax point, then the date of the invoice is taken as the date of the GST. If not, then it falls back to the time of supply as the basic GST. To cut long story short, it is basically the point in which you incur or pay GST. That is time of supply. And the invoice 21 days rule is to give you some leeway. So at least you can issue the invoice, and therefore within that period of the invoice, you do not need to go back and check what is the actual time of supply, if you do it within 21 days. If you fail to do so, customs will come in and say, you did it wrong. And then they will come all the fines and penalties. General time of supply is the basic tax point, so when goods are removed or when goods are made available to the customer, basic point of sale. Or for services, when services are performed. Specific time of supply rules, these would be, as I mentioned just now, the 21 days rule, tax invoice. This give examples of that. Next, within 21 days, I've covered in general. Disposal of business assets, whether for consideration, time of supply are when the goods are transferred or disposed. So this is for business assets. Now, this is another example of the government trying to catch everything. Let's say you have a printer in the office and you think, okay, I bring that home and use it. Well, this is where they will catch you. Non-business use of business assets would be goods temporarily taken out for private use for any purpose other than for business is a supplier of services. So that printer you nicely took home from the office, you have to charge GST. Continuous supply of services. Some services are supplied over a period of time. Think, for example, Astro. Basically, this would be supplied continuously over a period of 1 year. In this case, the government actually states that time of supply will be the earlier of when the tax invoice is issued or when payment is received. Why do they have to state it that way? Because sometimes people make payment without issuing the invoice. So, if they do not word it in this way, some people will use this and play with the system. Imported services. A recipient who receives imported services is required to account for GST by reverse charge mechanism, as I went through. So in this case, time of supply are when the supplies are paid for by the recipient. Okay, next would be value of supply. So in terms of GST, there are two basic concepts. One is time, the next is value. In terms of value, what is value? If you pay money for it, that is basically the value. But of course, you might notice some invoices, they don't state GST specifically. If you don't state GST and you're a GST taxable person, what you charge is actually deemed inclusive of GST. So government will find ways to tax you. So some people think, okay, I did not claim that from my customer. I did not charge him GST. Then what will happen? This is what will happen. Government will say, we deem that you have already charged him GST, and we will cross it up and charge you. And if you did not remit that, then we will fine and penalize you. So you have, even if you don't pay money, they will take open market value as the value. Imported goods, of course, includes all the duties, customs, excise, etc. For imported services, it's based on payment. Okay, deposits. If a deposit is refundable or not refundable in the form of security given, if it does not form part of the payment for the supply, then it's not within the scope of GST. If it is intended to be offset, then it is subject to GST. Examples: deposits which are not part of the payment. Deposits paid to DNB, for example. Those payments are not meant to pay your bill, are not meant to pay for the services. It is solely as a deposit, so no GST will be incurred. But if let's say you buy a car, for example, you pay 30% deposit. That deposit is offset against the final price of the product. Then that deposit would be subject to GST. Scope of supply, you have a very complicated spidergram diagram here. So this one, just take picture, then I'll skip. Okay, in terms of registration, I've more or less covered this. Basically, who needs to register is if you exceed the threshold of 500,000. Now the key question here is, when is that 500,000 annual turnover determined? Is it past? Is it future? Actually, if you follow the law, it is future. At any point where you believe that you will exceed the turnover threshold, you need to register. That is what is under the Act. However, for practical purposes, it is quite difficult. So, for practical purposes, if based on your historical turnover, you exceed the threshold, then you are actually required by law to register. Because the government can always look at your accounts and say you exceeded the threshold. But they can't go into your brain and see, you knew you should have exceeded. So the letter of the law is one thing, but enforcement is the other thing. Of course, if you look at the last line there, you can voluntarily register, but For all intents and purposes, it is very difficult to voluntarily register. Either very difficult or so far everybody is still waiting. That is practical issues. Taxable turnover excludes disposal of capital assets, imported services, and supplies made within or between designated areas. Notice one thing, as I mentioned previously, zero rated supplies are not here. So if you have zero rated supplies and taxable supplies, the determination of threshold actually includes both together. So once again, very complicated diagram, but basically picture tells 1,000 words. So take picture and move on. How to register? From June of this year, you can already register. Registration form can be online, usually simpler to do it online, or manual submission with the form. Basically, just go online. No need to waste so much time. Being government, if you submit the manual form, they chop sign, acknowledge receipt, you call them and say still, didn't reach department. It's at the counter somewhere. In fact, sometimes it can be quite frustrating to deal with government. You call them up and say, I submitted this. Oh, is it? You fax to me the acknowledgement? The acknowledgement by your own department must fax to you. Okay, well, these are practical issues. What do you need? Supporting documents relating to business, and upon successful registration, an approval letter will be given to inform the GST registration number. So the most important thing is the registration number. Group registration, this is for more complex scenarios. For groups to register together, this I shall not go into detail. If you fail to register, government shall fine you, standard. Late, also fine. Next. See, fines. See? So don't be late and don't fail. Simple lah. Comply the law and you won't get fined. Entitlement to claim input tax. Who is entitled to claim input tax? Basically, in general, if you cut all this long story short, if you can charge output tax, you can claim input tax, provided you have documents. If you look at the last part there, invoices must be in the name of the claimant for input tax credit of more than 30. In practical purposes, what this means is that if you buy something worth more than 500 ringgit, and why 500 ringgit? Because 30 ringgit is 6% of 500 ringgit. If you buy something more than 500 ringgit, make sure you get a full tax invoice with your name. So next time you go to Giant or something, after GST is implemented, you tell them to break every invoice by 300. If you buy total of 350 times 2 invoices. That's actually quite common in many countries, but not so much for GST. Those other countries, they do it because of coupon, one discount. Non-claimable input tax. Foreign persons are not entitled to claim input tax if you're not registered, if you make exempt, or you make out of scope. So same logic is, if what you do cannot charge, you cannot claim. There's one exception there, but I shall not go into detail. Blocked input tax. Certain things, government just don't want you to claim. Why? Don't know, got to ask it. These are passenger motor car, hiring a passenger motor car, and club subscription fees. These things, even though you pay GST, government say cannot claim. Don't ask me why, don't ask Najib. Next example is medical and personal accident insurance, medical expenses, family benefits, entertainment expense, whatever. Basically, they don't want us to have fun. Apportionment rules. This is more complicated. So far, we've dealt with scenarios where they make, where you make taxable, whether it be zero rated or standard rated, or exempt supplies. What if somebody makes both? If somebody makes both, then that's where apportionment rules come in. Because, as I said, you can only claim input credit if you do something which you can charge output. But if you do both, then your input, you have to apportion accordingly. How to apportion? Either by specific apportionment, if you can identify by exempt, non-exempt, or through prorating via revenue. Period to claim input tax, 6 years. Repayment, where consideration is not paid, this is more complicated. And these are the reasons why I say, for practical purposes, you need software to do it. Because here they say, if you don't pay it, if you don't pay for something for more than 6 months, you got to pay it back. pay back whatever input tax you claim. So imagine this, every time you do your GST returns, you have to comb through your aging and identify which one you have already claimed and you have not paid, and you have to do the calculation, apportionment, claim back, etc. Then next time you pay, you've got to pay it back again. So without the software to do it automatically, practical purposes, this will be too much work. Next, bad debt relief. Bad debt relief is similar in the sense that if you already paid for the GST, but you have not received any payment, then you can claim back for any GST which has been paid. Once again, this is subject to, if they pay you back, then you've got to pay it back to the government. So you need to be very careful on this, because when you do this and you claim for bad debt and you ask the government to pay you back the input tax, they will pay you back the input tax. Subsequently, if you fail to tell them that you've recovered this tax and that you fail to repay that tax, they will then charge you and penalize you more than what they paid you back. Summary of input tax credit, photos, take picture, thank you. Employee benefits. GST, if you give something free to employees, also got to charge GST unless you fall within the exemptions. So goods given free, also subject to GST, unless you fall within the exemptions. So employee benefits, once again, you have very complicated diagrams to tell you. Yes, no. Next, output tax credit, also same thing. Next, tax invoice. I've mentioned that tax invoice has specific characteristics as gazetted under law. So, in what case do you not need a tax invoice? When it's related, deemed, exempt, or where is a supply of imported services. Tax invoice, basically two types, full, simplified, already covered that, or electronic. Now, characteristics of a tax invoice. Take picture, okay, next. Okay, these are the items it should contain. All of these are under the GST Act. So this is an example of a tax invoice for a wholly taxable supply. Tax invoice in foreign currency needs to be converted into ringgit. Exchange rates given by customs. So don't simply use your own exchange rate. Pandai-pandai, okay, credit note, debit note. Adjustment in cost of business, of course, is unavoidable. So where there's credit note or debit notes, the necessary adjustments to GST needs to be made. And the right period is when the credit note, debit note is issued or received. Record keeping, most importantly, you must keep records. And you must keep records for 7 years. Can be in Bahasa Malaysia or English. So actually this is quite standard. It's in line with all the other requirements under Companies Act, etc. Of course, if you don't fail to do so, then you'll be fined or penalized. Basic trend. If you don't do what they need you to do, fines and penalties will come in. Taxable period, key things, 5 million and above turnover. Every month you have to do reporting, less than 5 million every quarter. If you want exemption from that, you can apply to customs. Filing of returns. Don't be late, basically, no later than last day or month following end of period. Furnish whether or not tax is to be paid. So even if it's all 100% zero rated, you still need to file the return. Notice of assessment, DG can assess the tax. So basically they can override what you submit and also impose fines and penalties. Incorrect return, fines and penalties. Penalties, evasion of tax, fraud, penalties, tax recovery. This is where government can sue you. If you fail to remit the right amount of tax, government can come after you, and these are what they can do to you. So key lesson to take away, don't do wrong. Thank you.